Welcome and thank you for joining us. My name is Jo Hayes. I'm a corporate relationship manager for Nationwide and the Mortgage Works, and I'm going to be your host today to introduce you to our guests, put questions to them following the presentation. So joining me today is Suzanne Smith, and Suzanne is the founder of the Independent Landlord, and that's a trusted authority in the private rented sector in England, which helps tens of thousands of landlords, letting agents, and property businesses every week through her free website, YouTube channel, membership, as well as influential weekly newsletters. Now, Suzanne's worked as a solicitor and manages her own portfolio, which gives her a direct understanding of both the strategic and day-to-day challenges that landlords face. And this legal and practical experience, together with her good landlord ethos, are the foundations which underpin the independent landlord. So good morning, Suzanne, and thank you so much for taking the time out of your schedule today to talk to us and share some practical insights on what's coming in 2026 and how landlords can prepare.
Thank you. Well, there's certainly a lot coming our way this year, that's for sure.
Definitely. And, a little fun fact for you and the viewers today, Suzanne, January, as we're in today, coming to the end of, it was named after the Roman god Janus, known as the protector of gates and doorways, a symbolizer of beginnings and endings. And it was depicted with two faces, one looking into the past, the other with the ability to see into the future. And the Romans often made promises to Janus and exchanged good wishes. So that's really where New Year's resolutions are understood to have come from. So, what's good wish would you think you'd want to make for 2026?
Oh, wow, good wish. I'm not even making wishes. I'm just looking forward and planning and trying to do our best because I think that's all we can do. But hearing you mention about gates and doorways. Literally over the last couple of weeks, I've been painting a gate to one of my properties that I've just let, and I've replaced the doorway, the back PVC. But yes, I think really we do need to be looking forward because the past is behind us. And I think as landlords, if we're going to succeed in this new environment, we need to figure out how we need to adapt and adapt. And that's really what we're going to be talking about today.
Indeed, and I know we've got lots of people joining us. So before I hand over to you, I just wanted to let our viewers know that they can submit any questions during this live event via the Ask a Question button at the top, and we'll pick as many as possible later on. And I want to say a big thank you to all the questions that have already been submitted ahead of today. You might find that as Suzanne goes through her presentation, the answer presents itself, but if not, we'll have some pointers at the end of where you can refer to for further information. And we'll also be recording this webinar for anyone who's unable to join us live to watch at another time. So without further ado, Suzanne, I'll hand over to you.
Well, thank you. So, welcome everyone. I think I'm going to move on to navigating the private rented sector in 2026. Well, a lot's happening this year and things are coming thick and fast already in January. We've had a lot from MHCLG, the Ministry of Housing, Communities and Local Government, with the written statement last week, which I'll get into a little bit. EPCs with Des Nez last week, which we'll get onto today. And yesterday there were new rules on common hold and ground rent and forfeiture. And I'm sure there's going to be a lot coming. But it can actually feel quite overwhelming. And what I try and do is to bring it all together and to try and make sense of it in a practical way that isn't alarmist, because I'm going through it myself as well. So I'll just move on to the next slide. So this is what we're going to cover today. A little bit of introduction. The bulk of the webinars on the Renters' Rights Act, but we've decided to extend it today to cover EPCs because a lot was announced last week. And I'll cover briefly making tax digital at the end before we go to Q&A. So, you can see a picture of me instead of looking at me. So I'm Suzanne Smith. I worked as an in-house solicitor for 25 years in the pharmaceutical and life sciences industry. I come from outside of property and housing, And I think that means I bring a different perspective to it. And I became a landlord initially as an accidental landlord in 2019, and I have, now have a very small portfolio in Kent, and I found it quite difficult to find the content that I wanted when I was first starting out. And so after I've been doing it for a few years, I decided to set up the Independent Landlord to help landlords for free to give the sorts of content that I wanted, but using my in-house lawyer brain, which is very much about problem solving rather than suing other people. And I did it a little bit as a hobby to begin with, paying forward, but now it's pretty much a full-time job. And my free weekly newsletter that goes out every Friday, pretty much every Friday morning, has around 15,000 subscribers, which is quite something. And I guess instead of a job, it's like a vocation, really. And I've over the summer, I was approached by some subscribers, and they said they wanted to have a membership where they could ask me questions and have a nice community with training and things. And so I listened, and I set up the Independent Landlord Hub, which has now got over 1,000 members in 6 months. It's exactly 6 months tomorrow since I first set it up to beta testers. So there's a lot. I'm going to cover a lot of ground today. And if you look on the independentlandlord.com/themortgageworks, or one word, then you'll see links to lots of useful information. And you'll also be able to see the replay later. So there's next, I'll go on to the next slide, which is understanding what's coming of the renters' rights, because it has changed quite a bit. It's changed significantly since the Renters Reform Bill. And so often when you're searching on Google or whatever for answers, it will tell you something that's out of date. And I'm trying to condense what is about a 2.5-hour training session, 40 lessons in my hub, down to the essence of it, the highlights in this webinar today. And so before we dive into the detail, this is the kind of the big picture of how it's going to roll out. And the first big date is the 1st of May 2026. And that's when the new tenancy system comes into effect for all tenancies on the same day, overnight. And I'll get into that in a little bit to explain what it means. And the other Renters' Rights Act changes come into effect later. The PRS database, when I got the date 2027 there, that's in the implementation roadmap that the government published before Christmas, as being that's where the full rollout. There might be a regional rollout at the end of this year. And then in 2028, we'll have the Landlord Ombudsman. That's the redress scheme for landlords, where tenants can make complaints about landlords. And after that, sometime will be AWAB's law, which is remedying hazards. We don't yet know when that's going to be, and that will be there'll be a consultation on that. And the Decent Home Standard is likely to be coming into effect on 2035. It's already in effect for social housing, and it will be rolled out to the private rented sector sometime from 2035, according to the implementation roadmap. So this slide just breaks down to how tenancies are changing on the 1st of May. And the most important thing is they're not going to be called ASTs anymore. They're going to be called Assured Periodic Tenancies, or APTs. And that's because they are periodic, rolling from month to month, and there's no minimum period. Their fixed terms will end at the stroke of midnight, or 1 second after the stroke of midnight for the 1st of May. And it will be you'll be able to receive a civil penalty of up to £7,000 if you try to let on a fixed term basis from the 1st of May 2026. And there's no qualifying period for the tenant. That was in the Renters Reform Bill, that they had to have been with been a tenant for 4 months before they could serve notice to quit. But from that went in the Labour's version of of what is now the Act, and tenants will be able to serve 2 months notice to quit from the 1st of May, and it has to expire at the end of a rent period. But be aware, if your tenancy agreement says that it's less than 2 months, then that it will be that lesser period. And you can also waive the notice to quit as well. The AST and the APT, so the kind of the OG to use the Mortgage Works logo. The original tenancy agreement that assured short hold tenancy, and the APT that assured periodic tenancy, will be considered as one continuing tenancy. They're not stopping and starting. It's not like when you have an AST come to end of a fixed term and then you issue another renewal, and then that's considered a new tenancy. These are one continuing tenancies, which is helpful because it means that the clock doesn't restart on the 1st of May, and you don't have to reserve all the documents. And I'll get onto that in a minute. So there'll be no more renewals, and the landlords should not be renewing tenancy agreements now. There's absolutely no point doing it for just 3 months, and let it roll, because when a fixed term comes to the end at the moment, if you do nothing, it would turn into a periodic tenancy anyway. The tenancy doesn't end. It's just the fixed term expires. And so you can let them roll over now, which is what I've done. I've not renewed any of my tenancies. And all new tenancies will need to have a written statement of terms. And we found out what that meant last week. We'll be able to put it in our new APTs, our new assured periodic tenancies. It's the bare minimum of terms that need to be in a tenancy agreement. You can do it as a separate document, but I think most people will put it in the APT. And if you currently have an oral agreement, so you've let somebody move in and you haven't written anything down, you will need to give them a written statement of terms by the 31st of May. And so that there, in a nutshell, is what the new tenancy looks like. But it's more than that, because there are new rules for every stage of the tenancy, which I will get on to now. Just have a little slurp of tea. So one of the most complicated areas of the Act is the sections that are dealing with the setting and receiving of rent from the 1st of May. And I'll go through them quickly here. And in the independentlandlord.com/the mortgage works, there's a blog post in there that goes through all of this in a lot of detail. And there's also the government's materials that are good if you just search for renting is changing. So the first of all is from the 1st of May, when you want to find new tenants, you must state the proposed rent in listings and offers. So even if somebody approaches you about it by word of mouth, if you confirm it in writing, you must say what the rent is going to be. And once you set that rent, and it's referred to as the advertised rent, or in the legislation, it's the proposed rent, you cannot accept an offer above that amount. And that's called rental bidding, and they're trying to stop that. I mean, it never really happened in my bit of England, but it was quite common in London, apparently. And so it means that when you put the rent, you can't, if you've got competing people who want the property and one of them offers you more, you can't accept that, even if you don't ask them to it. So that's very important. And the next thing is that for new tenancies from the 1st of May, tenants cannot pay you rent until you've both signed the tenancy agreement. They can pay the holding deposit or the tenancy deposit, but they cannot pay you rent. And that will be a breach of the Tenant Fees Act. And that is a big change. And this is called the prohibited pre-tenancy rent payment. Another thing is that there'll be a maximum rent period of 1 month. So, which is, I think, is pretty much the standard anyway at the moment, 1 calendar month for a rent period. But if you currently have a quarterly rent periods or 6 monthly rent periods, then they will be scaled back to 1 month. There's a formula in the Renters' Rights Act. And for new tenancies, that rent cannot be due in advance, which means before the first day of the rent period it relates to. So say you have a rent period that starts on the first of the month, and you want somebody to pay you on the 25th of the month. You can't ask them. Well, it's not enforceable if you ask them to pay on the 25th of the month. The first day that they can pay that is valid is the first of the month. And that is a new rule for new tenancies. If you have a situation at the moment where you have rent in advance for existing tenancies, and it might be that they have to pay you 3 months in advance, then that will still be valid. But these rules are quite complicated, and I'm going through them quite quickly. But the main thing to remember is the tenant fees breach, which is not to accept rent before the tenancy is entered into. So the next thing is that any clauses in new tenancies with rent in advance will be invalid. So if you ask them to pay early, then it just won't be invalid, but it won't be a breach of the Tenant Fees Act. That's just for rent payments before you enter into the agreement. And tenants will still be able to pay rent in advance voluntarily after the tenancy starts. I get a lot of questions about that, and that is absolutely fine. And this may happen, sometime. One of my rent payments is on the 25th of the month, and when it comes up to Christmas, the tenant pays me a bit early, just so she wants to get it out of the way, and that's absolutely fine, and that will continue to be fine, so long as you don't accept any rent before the agreement is entered into. So the next thing is increasing rent from the 1st of May. This is less complicated, luckily, in that when you want to increase rent from the 1st of May, that means serving a notice from the 1st of May. The only way that you'll be able to do it is by using the Section 13 process. And there's a new form that we published in March, apparently, that is called Form 4A, and you'll need to serve that on the tenants with at least 2 months' notice. At the moment, the Section 13 notice is called Form 4, and you only need to give 1 month's notice. And if you serve a Form 4 before the 1st of May, it will still be valid. But from the 1st of May, notices served from the 1st of May must be done by Form 4A with at least 2 months' notice. And that 2 months' notice must expire in time for the start of the relevant rent period. And the tenants will be able to challenge this rent increase in the tribunal. Now, they can at the moment for Section 13, but the rules are going to make it easier for tenants to do this. And this is because the tribunal will only be able to keep the rent the same and will not be able to reduce the rent. And the tribunal will look to see what the open market rent is for similar property in the area that has similar features. And if they think that the rent is too high, then they will be able to reduce it. And there's going to be, I'm sure, a lot of services that will help landlords to try and figure out what the open market rent is. So once you've served this Section 13 notice, Form 4, you can negotiate the rent afterwards. So say if you serve a notice that suggests a rent increase of £50, and the tenant says to you, I can't afford £50, how about £25? If you then accept £25, then that's fine. You can document that via an addendum, and they then can't, once they've signed that and they've accepted it, they then can't take you to the tribunal. So that, I think, will probably become really popular. But on the other hand, I just have a very different approach to increasing rents. I tend to go on inspection 2 or 3 months before the rent is due, and I have a chat to them and say, well, I'm thinking of increasing the rent by this amount, or not increasing it at all, because in some areas the rents have stabilised. And I have a chat with them and check that they're happy with it, and then I serve the Section 13 notice. And I think if you're reasonable and you don't try and game the system, you're likely to have fewer problems from tenants, because I think if tenants feel that a rent increase is fair and reasonable, they're less likely to challenge it. And we want our tenants to stay, and we want to keep the rent that's the right level for us, but also is affordable for them. It's a balance. And so if you have a rent review clause in your existing assured short hold tenancy, then that will be unenforceable from the 1st of May. It will be as if it can be ignored. And just while I'm mentioning that, these rules don't affect high rent tenancies, which there are some around in London where the rent is 100,000 a year because they're outside of the Housing Act, and so they're not covered by the Renters' Rights Bill. And so rent review clauses, which are very common in those agreements, in those tenancies, will still be enforceable. But for here, what I'm talking about, renters' rights, are the assured short hold tenancy with the renters under 100,000. And as I said, you can't change rent by addendum unless you first serve the Form 4A. If you do, it's not an offence and you can't get a penalty for it. It's just not enforceable. The tenant can ignore it. And you won't be able to increase rent via renewals because renewals won't exist. And I know that's something that letting agents are concerned about. So on the next slide, I'll just pause there slightly. I have another cup of tea. So up until now, we've done the new rules for the tenancy, the rules for setting rent, and increasing rent. Now we're moving to the other end of the tenancy, which are the new rules for evictions. This is probably more likely to be familiar with you because there's been a lot of talk about the end of Section 21 no-fault evictions, in inverted commas. Although I actually don't think it's the most important thing that's happening. There are lots of other things that will affect every landlord, whereas Section 21 abolition only affects landlords who are wanting to evict tenants, and that's not all of us all of the time. So the very important rule is that from the 1st of May, we can no longer serve a Section 21 notice. That's Section 21 under the Housing Act 1988, and it's called a no-fault eviction, although it doesn't mean there isn't a fault. It just means that we don't have to give a reason to the judge. And as long as we've jumped through some hoops on the compliance side, the judge needs to grant an order for possession if it gets that far, and we have to go to court to evict them. So the last day you can serve a Section 21 notice is the day before, which is the 30th of April by 4:30. But I wouldn't leave it until then. You want to give yourself a little bit of room for manoeuvre, and as it really is the last chance saloon, I would speak to a solicitor who is specialist in the area to make sure you do it properly if you're wanting to do that. And then there's a very narrow window from the 1st of May until the 31st of July for landlords to, if they've already issued a Section 21 notice before the 1st of May, to do the first step of enforcing it if the tenants don't move out in time. And that is by issuing a claim form by the 30th of May, or they have to ask the court to issue a claim form, and they have to do that by the 31st of May. If they don't do that by the 31st of May, the notice will fall and it will become an ordinary rolling assured periodic tenancy. And from the 1st of May, if you want to evict a tenant, you must only use valid grounds under Section 8 of the Housing Act. And these include the important new one is selling up, and they've also changed the moving in ground. There is the slightly more difficult to use the rent arrears ground, and there is a new ground for student HMOs. And when I say students, I mean full-time students. And if you try and evict a tenant using any other method, which includes just speaking to them, or say you have a clause in your agreement that says that you can serve 2 months' notice, if you try and use that, then you can receive a civil penalty of up to £7,000. And if you ask them to leave when you don't have a valid ground as well. So other tenancy reforms on the 1st of May. The first one is the banning of rental discrimination against families and benefit claimants. For you can still turn down claim applicants if they can't afford the rent or if they have a bad credit history, if you've got good objective grounds. But just because somebody receives benefits doesn't mean that they're not going to pay the rent on time. I know that I have some tenants who pay with who have universal credit and they've never been late paying. And then there are plenty of landlords who let to people who earn a lot of money and then they fall into rent arrears. It's an important thing is referencing to see if they have a history of paying rent, and if you have a small property that's not suitable for families or a room in an HMO, then that's a good reason, proportionate means for achieving a legitimate aim, to use the lingo. So that's briefly rental discrimination. There's a new implied right for a tenant to have a pet as long as they follow the process that's in the Act, and you must have a good reason to turn them down. The local authorities will have extensive powers of investigation. In fact, that's already partly come into force already. And so they will be able to gather evidence quite easily by asking you for it, or even coming to your property in certain circumstances, to your offices, letting agents, and Rightmove. And also there are civil penalties of up to £7,000 for almost every breach, or for a breach of almost every provision. The only ones I think that don't are the implied right to have a pet, and there are a couple of other ones as well, but not many. Most of them come along with the civil penalty by the local council. And there are new offences with civil penalties of up to £40,000 as an alternative to prosecution for lots of different things, and rent repayment orders for 13 offences. And there are 6 new ones for up to 2 years' rent. So it really comes with very high sanctions. So what do we need to do? And luckily, we don't have to issue new tenancy agreements. The government is actually making it quite simple for us. This bit is simple, and that is we will have to serve what they're calling an information sheet detailing the reforms of all the tenants that you have under ASTs as of the 1st of May, who then turn into APTs on the 1st of May. It's going to be published on gov.uk in March. And make sure you keep a record of it, because if you don't serve an information sheet, the local authority can issue a civil penalty. And also, as I mentioned earlier, if you don't have a written record of the tenancy, written terms, then you need to serve the written statement of terms to the existing tenants by the end of May. And if you wish to use the new ground 4A, and that's the HMOs with full-time students, you must serve a statement on your tenants by the 31st of May. And what we don't need to do is reissue tenancy agreements, which is great. We don't have to reserve all the documents like the gas safety certificate and the EPC, etc. We do not have to re-register tenancy deposit because it's a continuing tenancy. And if a tenant has paid rent in advance, then we don't have to repay it because they're allowed to pay rent in advance once the tenancy started anyway. And the only time you'd have to repay rent in advance is if the tenant leaves before the rent is effectively used up. So getting ready for the 1st of May. Well, there's lots of free resources on the Independent Landlord. You can just Google that, or you can look at it up down below, theindependentlandlord.com/mortgageworks. I've got a huge amount of free content on there, and on my YouTube channel as well. I've done 2 recent videos there that are up to date. And I also must give a shout out to MHCRG, that's Ministry of Housing, Communities and Local Government. They have a Renting is Changing hub that has lots of useful documents, and I've looked at it quite a few times. It's very useful. And just a couple of other tips is I really recommend that even if you use letting agents to go on an inspection, I call them maintenance visits because it's nicer, and it's also reflects better my approach. I want to go and see what needs fixing. go along on an inspection to check the condition of the property and to chat to tenants, because research shows that if tenants know that a landlord cares, they're more likely to feel listened to and to be happier. And we all want happy tenants, because happy tenants stay longer. And it just makes being a landlord a pleasure. It can be a pleasure. And when I do the inspections, the maintenance visits, I mention the reforms to the tenants. All of my tenants are now on rolling contracts because I didn't extend the fixed terms when they came up for renewal, and I explained the reason why. And they were, a couple of them were a bit concerned. They like to have a fixed term, but I explained that the rules are changing to this anyway, and they will have more protections under the Renters' Rights Act anyway. And so don't renew fixed terms now, because it just gives the wrong impression to tenants if you issue a 6-month or a 12-month tenancy for a fixed term now, when you know that on the 1st of May it's going to be rolling anyway. What we should be doing is explaining to tenants what's happening, and that they'll all be coming rolling anyway. Also have a think about changing your selection criteria. For instance, don't have a no DSS policy. And because not only will that mean you might miss out on some really good tenants if you have a no DSS policy, but it will be rental discrimination, and you could receive a civil penalty of that. And one really important thing is to make sure that from the 1st of May, when you issue a new tenancy, that you use an assured periodic tenancy template, because the ASTs will have a fixed term in it. And if you purport to let for a fixed term on or after the 1st of May, you could receive a civil penalty of up to £7,000. So that's that, renters' rights in a nutshell. I'm now going to talk about energy performance certificates. So I'll just have a quick slurp of my tea. I have my London mug here. I'm a big fan of these big mugs, pint mugs. Right. So what's happening with energy performance certificates? The government issued a whole swathe of documents last week on EPCs, and there are literally hundreds of pages which I waded through and tried to make sense out of, and I am now going to take you through it in the best that I can. And there are a lot more resources. I've got a very detailed blog post and a YouTube video on it. But so there's been a lot of talk about increasing the minimum energy performance standard, that's MEES, to an EPC-C for a long time. And in fact, it was supposed to come into effect at the end of 2025, and the date keeps being pushed back. But as of this time last week, the government announced that all domestic private rented properties in England and Wales must have an EPC-C or an exemption by the 1st of October 2030. There was a consultation last year when they were talking about 2038 for existing tenancies. That's been taken away. It's now 2030 for all tenancies that are in scope. That does include HMOs, and it does include heritage properties, but properties can have an exemption. As far as I can see, the only rental properties that are outside the scope are high rent tenancies, because they're not governed by the Housing Act. But I've not seen that. That's what the current rules are now, but I've not seen that in the actual consultation documents. So that's just a possibility there. So before I get into all the rules, I want to go through the exemptions first, because there are some very important exemptions for landlords. And the first of all is the cost cap of £10,000. So if to get to an EPC-C is going to cost you more than £10,000 starting from the 1st of October last year, then you don't have to spend more than £10,000. And if you're property is worth less than £100,000, then that cost cap is 10% of the value. And so that means if your property is worth 80,000, the cost cap is 8,000. 10% is still an awful lot, but it is at least something. And there are other exemptions. You do not have to put in solid wall insulation. You can refuse to install it. You just have to register and say that. I mean, I've managed to obtain EPCCs on my Victorian houses without solid wall insulation. So it is possible, but you can refuse to do that. And another one that people often ask about is if the tenant refuses the works to be done, that the planning department, say your listed property, and the listing people say that you can't change the windows to double glazing, then that is fine. That will be an exemption. And if you're in a leasehold property and the freeholder refuses to do the work, then that is that's an exemption as well. There's a new exemption called negative impacts, and there's quite a lot on that. But if it's going to reduce the value of the property or be a problem for the property, and that will include heritage as well, and all relevant improvements made. Sometimes there are properties that all improvements have been made and now still won't get to EPCC, and then that's an exemption. So when I go through the next bit, just have these exemptions in mind. And the £10,000, it will kind of be index linked. They're going to look at it every 5 years, but certainly it's going to stay at £10,000 until at least 2030. And there are grants available, particularly if your tenants receive universal credit or other benefits. So it's worth investigating that. So that's the first bit, which is the overall rule of needing to get to EPCC. The next one is the way that the EPCC will be measured is going to change. And this came out last week and it's been talked about for quite some time. It's a big consultation document came out last week for something that's going to be called the new home energy model for EPCs. And that's a completely different way of assessing EPCs. And it's going to replace the current cost-based methodology, which is the EER, which is the energy efficiency rating. And it's replacing that, and it'll become compulsory as the method from the 1st of October 2029. So that's a year before the EPC rules come into effect to get to EPCC. So the detail is subject to consultation. There's a lot of detail in it and it's still not terribly clear. But the first step is that we must meet the fabric performance metric. And that means insulation, windows, etc. So if you look at your existing EPC now and you exclude everything to do with heating, it's that. And if you would get an EPCC now on the insulation and draft proofing, etc., then you're likely to get an EPCC on that fabric performance metric, which is the compulsory metric in the future. And then there will be a second metric that landlords can choose. And this is where I think it's going to get complicated and we'll need to get advice. And no doubt there's going to be a lot more guidance about it. But this is a summary of what it is. The first one is the heating system metric. And that, in a very short version of explaining that, it's a heat pump will get a C rating. It doesn't mean you have to have a heat pump, because there are other ways around it. But it says if you're wanting to use a heating system metric, a gas boiler will not achieve a C rating. And so you would, if you don't want to put in a heat pump or some of the other methods that low carbon methods of heating, then you'd need to use the smart readiness metric, which includes microgeneration, which is solar panels, smart meters, electric batteries. There'll be storage heaters and things. It is quite complicated. I'm personally not entirely sure exactly what we'll need to have to get a C on that, whether we'll be able to get it with or without solar panels. And all of this is out to consultation anyway, so I wouldn't be too alarmed about it. This is just as an awareness to let you know that this is what the government are talking about at the moment. And who knows, things may change, and technology is always getting cheaper and better. So I'm personally choosing not to worry about this too much. And don't forget, it's subject all to the exemptions that I mentioned. And the next thing that is really important is that if you have a property that with an existing EPCC on the 1st of October 2029, you'll be grandfathered until expiry. I'm not really sure where the term grandfather comes from, actually, but it means that your EPC will last until it expires, even though it's done under the old system. And I think that if you're near to getting an EPCC, then that's a very good way. Just get an EPC, just do the upgrades, and then it will give you a bit of breathing space. If you're a long way away from it, then wait until you see what the final proposals are, and get some advice about how much it's going to cost, because you may not need to spend as much as you think, or you might miss the cost cap, or you might hit the cost cap or have another exemption. And a good bit of news is that the 10-year validity will be retained for EPCCs, that government is still deciding whether or not we'll need to renew EPCs for an existing tenant when they expire. That's unclear. And we must achieve EPCC or an exemption by October the 1st, 2030. And on that link below, I've got a detailed blog post on all of this. Right, so making tax digital. I'll just go through this quite quickly because it doesn't affect everybody at the moment, at least. So what is making tax digital? It's going to start rolling out on the 6th of April for unincorporated landlords who have qualifying income of £50,000 or above. And it's the digitization program for income tax. And for once you're in scope, and it will change, I'll show the dates in a minute. But when you're in scope, you need to keep digital records of income and expenses, and you need to use MTD approved software to submit your quarterly figures. That means your gross rent and any other sole trader income. If you do consultancy work as well, you'll need to submit that. So you need to submit your gross income and your expenses quarterly, and you can do this by accounting software. For instance, I personally use Hammock, which I'm very happy with, but there are lots of other ones as well. And there's a list of software to choose from on the HMRC website. There's bridging software that will link an existing spreadsheet to HMRC, but be aware that you need to use the software to submit your tax return at the end of the year. So if you have other income, for instance, PAYE income or dividends, or so if you have dividends, interest, etc., and you haven't already accounted for those, then you'll need to put that in through MTD. So the PAYE is outside of that, because that will have already been done. So this is the rollout of MTD. It's determined by the amount of qualifying income from property and sole trader self-employment, and that does not include income from PAYE or pensions. And in that 50,000 for the first year, it doesn't include your income from interest payments, from savings or dividends. And it's going to be rolled out that those of us who have 50,000 or more income in this coming tax year will need to be using MTD software for that full tax year, and you'll be needing to submit quarterly submissions. I've been on the HMRC pilot this year, and it's actually saved me time, and it's not something that I'm worried about. There's a little bit of a setup, and now it actually makes my life easier. And if you're in the above 30,000, then you'll be in 2027 to 28 tax year, and then over 20,000, it will be the following tax year. And so here's a few tips. If you're in the first wave or second wave, and speak to your accountant, because they will likely have their preferred software. And get into the habit of digitizing your records. Keep digital copies of receipts. It makes it so much easier. And because you have a bank, if you use the accounting software, you have a bank feed, and all the transaction comes in, and you just upload the invoices, and then and you allocate them to the property and what it is, and then it all happens magically. And if you have a separate bank account, it makes it easier, because if you link up your bank account into the software, you'll have to keep excluding all of the transactions that are nothing to do with your property business. And if you use letting agents, ask how they'll provide you with digital receipts that detail the gross rental income and the expenses, because often it comes through as a net. And don't leave it to the last minute to set it up, as it can take a little bit of time, and you need to get used to it. And also, everybody's going to be wanting to do it at the start of the tax year. So if you can do it ahead of time, that makes sense. There we go. Right, Q&A.
Fantastic. Honestly, Suzanne, there was a huge amount of information in there. I completely understand it can be quite overwhelming for some to understand, everything that they will need to go through to make sure that they're compliant with these rules. And so anyone that's watching, of course, we have recorded it, so you can go back frame by frame to remind yourself of what you need to do to be ready. And we've been overwhelmed with questions, Suzanne. I have to say, quite a lot of them you've covered in your presentation, but so I'll pick up on a couple of the ones that have come through. It may well then reinforce some of the messages that you've given out, and will give us a bit of time to look through these. And I've tried to put them into sort of themes. So I'll cover some of the ones that are based on the Renters' Rights Act first of all. So we've got one here saying, my existing written tenancy agreement states that the tenants have to give 1 month's written notice if they want to vacate at the end of any fixed term. As all will then be periodic, with the introduction of the Renters' Rights Act, will tenants now be required to give 2 months written notice, or are they covered under the original written agreement of 1 month's notice?
Yeah, that's a really good question. And the thing is, when you've got this is just how big it is. I've studied it. It's a complex bit of litigation, and for a lot of questions, we won't actually know the real answers until they're tested in court. Now, for this question, what I think the answer is that the notice to quit provisions refer to that a landlord can't ask for more than 2 months' notice to quit, and that will be the maximum, and that will be the amount unless a landlord agrees to a low amount. And I think most of the commentary that I've seen from solicitors is saying that if you have an existing tenancy agreement that has a lower amount, 1 month, then that is the period. So it will be the lower amount of 1 month rather than the 2 months. But I tend to, because I have single lets with tenants who are there for a long time, and I only ask for a month anyway. I wouldn't hold them for 2 months. So but it depends. It's different. If you're in an HMO, you might want to hold them for the maximum time.
Okay, fantastic. Thank you. And we've got another one here with someone who's got they have an overseas landlord whose daughter is going to uni in London next year, and they would like to have the property vacant so that she can then move in. Would it be possible to gain possession for this reason under the Renters' Rights Act?
Yeah, so there is a ground called the moving in ground. That's ground 1, and you would need to serve a notice for that. The tenancy must have been in place for at least 8 months, and then you serve a 4-month notice period. And then if assuming they move out, then it will all be fine, and the daughter can move in. If your daughter changes her mind and she doesn't move in, you can't relet it for a restricted period of 12 months from when the notice expires. So it's actually 16 months. So there's a lot of detail in it, but the short answer is yes, you will be able to do it.
Fantastic. And actually, we have got a question on the 12-month piece about if a property is marketed for sale but doesn't sell, is it true that it can't be rented again for 12 months, and how would that be
Yeah, no,
enforced?
and that's exactly the point. So for this new selling up ground, the uh, the government was worried that landlords would game the system by saying, "Oh, I want to sell," and then they don't really want to sell, and they just relet it at a higher price. So as a big stick to stop stop landlords from trying to game the system, and also to encourage landlords to sell properties with tenants, so not with vacant possession. They're wanting to make sure that landlords are not just testing the market, that they're committed to selling. And so the restricted period runs from when you serve the notice, for the 4 months of the notice period, and then 12 months after that. And during that period, you cannot market the property for letting, and you cannot let it or put it on Airbnb. You can have your family move in, and if somebody moves in and they don't pay you anything, then that's all right. But so it's a 16-month period. So if you're wanting to use that, you've got to price accurately. Otherwise, you could be sitting on an empty property for a long time.
Yeah. Okay, thank you very much. And we've got someone else here when it comes to eviction. They've got a tenancy that's ending on the 7th of May, and they're asking if we serve a Section 21 now within the terms of the contract, will this still be valid given it's after the Renters'
Yeah.
Rights Act kicks in?
So the notice has to be valid on the day that you serve it. And so if you were to serve it, we can't think what the dates are, but you've got to serve it. The notice needs to expire 2 months after you serve it, and so you could serve it now and have it expire at the end of the 7th of May, etc. That would be fine, and then you would have that narrow. If they don't move out, then you would have that narrow window until the end of July to apply for an order for possession. And if you're thinking about doing this, do talk to a solicitor to make sure it's done properly, because you're not going to be able to correct mistakes if you don't get it right before the 1st of May.
Brilliant, thank you. And we've had a lot of questions asking where they can find information. So where can a landlord find what they need to provide to the tenant, for example?
Well, what we need to provide to the tenant will be published by MHCLG in March. This is the information sheet, and a very easy way to keep up to date with all this is to sign up for my newsletter. It's totally free, because this I'm all over this stuff. give you links to everything. So you can find that on the independentlandlord.com/themortgageworks or /subscribe.
Brilliant. And I'm conscious of time because I know we have run over our initial allotted time, but there's such a thirst for knowledge here. So I'll cover a couple more questions. So moving on to the area of like rent increases and the tribunal process. So if a landlord wants to raise rents before the deadline, what timelines apply and what evidence is needed to justify if an increase is challenged? I know you did touch on this as well.
Yeah, and it's a really good question. So until the 1st of May, you carry on as normal. So if you have a rent review clause, you can use the rent review clause. You can serve a Section 13 notice using Form 4 under the existing rules before the 1st of May, and give the correct notice. As soon as the 1st of May comes, then you've got to use Form 4A.
Brilliant.
And that will be 2 months' notice, and the tenant will have more rights to appeal against the rent increase. It'll be easier for them.
Brilliant, thank you. And on the topic of making tax digital, someone's asking, is there a cost-effective solution for a husband and wife who own property jointly, will each be above the MTD threshold, and will each need to keep digital records and submit returns?
Yeah, so if they jointly have rental income of 100,000 a year, so it's 50,000 each, then they will both need to do their own MTD. I know that a lot of the software does provide for that. I think Hammock does, for instance, and so you wouldn't have to be putting the same records in twice. But and the thing is, the software doesn't actually cost that much. It's a very small amount of money, and it will save you time.
Brilliant, thank you. And on the EPC topic, how would a landlord know what is needed to improve their property to a C, or if it qualifies for exemption?
So the first place to look at now is the EPC certificate. It will give you an idea, and have a look to see if there's anything that says assumptions, because often it says the assumption is that there's no insulation in the loft because the EPC assessor has not gone up into the loft. And if you see that something's wrong, I bought a property, it said assumed no insulation, and there was insulation in there. So to have a look to see if there are any obvious mistakes, and then you can get an EPC assessor around to give you some advice, and there are qualified people who can do this. So and give you advice about what you need to do, because sometimes, I mean, normally the quickest way, the easiest way to improve your score is to put insulation in the loft that's relatively cheap, and that gives you a really good payback. Windows are expensive. They cost, the big ones cost about £1,000 each, and that's not a cost-effective way of doing it. But once you've got all the windows in there, then that will help you with the fabric performance metric in the new system.
Great, thank you. And we've had a few questions about that look like they're looking for tax advice. So I would just say to anyone looking for tax advice, make sure you go to an accountant or a qualified tax specialist to be able to get that advice for you.
Yes, and if the advice is, it sounds too good to be true, it is too good to be true. Don't believe it.
And I've got a question for you as well, really, Suzanne. I'd just say, what are the 2 key takeaways you'd like people to take from today?
Well, I think for renters' rights, because that's front and center, because that's happening very soon, is first of all is make sure you serve your information. The information sheet on your tenants is going to be a bit like the how to rent checklist. Once it's published in March, you've got until the end of July to serve it, and read it and explain it to your tenants if you self-manage. Talk to your letting agents to find out what they're doing. Letting agents should have had all training on this, but that doesn't always apply. So that's the first thing, information sheet. And second thing, and there's one really important thing, is from the 1st of May, do not use an old tenancy agreement, because that will have all sorts of horrors in it, including a fixed term that can get you into trouble. And so make sure that you get a new tenancy template. I've got the Moan in my hub, but the NRLA have them, and there are other organisations as well that will have good assured periodic tenancies for you to use.
Brilliant. Thank you so much, Suzanne. And I'm really conscious that we might not have covered all the questions. We had over 50 questions coming in today. So what I would say is please do look at our intermediary website or our customer website, where you can see more details for information. In a few days, you'll be able to see a recording of this webinar as well. And also Suzanne's own YouTube page, The Independent Landlord, where you can find a whole host of useful information. So it just remains for me, Suzanne, to thank you so much for sharing your time and knowledge on what is a complex subject. And I hope it's really helped those watching today to have a better understanding and found it really informative. So, and then it just remains for me to say, finally, that your feedback's really important. So at the end of here, you'll see a QR code, but you can also use the feedback button at the top. To please do give us your feedback, because it really helps inform us and shape further webinars that we do. So thank you all for watching. Suzanne, thank you again. Goodbye.
Thank you.